Patrick asked a question here. He said, is there a guideline to follow? Let me just go here real quick. Is there a guideline to follow to determine when a long put and a married put becomes useful as an alternative profit to the trade? You're in a married put, the stock falls, you want to close out the stock and just hold the put and profit on the put. All right, commonly, so let's go to my trades. Let's go to the portfolio. I meant to open one this week, but I was doing some other things that you guys are going to see next week. I'm going to use Caesars as an example. Now, it had a really strong move the other day. I was very happy with that. You probably saw that in the email when I referenced it. Thank you, Jeffries, for Caesars. It put it right back where I needed to be to start doing some good income methods on the position. Married put on this one. What are we talking about? We're talking about our preferred married put. Let me go to the Planet Fitness married put position. We have stock. And I have a different cost basis because I've been in it for a while with different income methods. Got a May 105 put, current 7.8% at risk on the trade. And that gives us a guaranteed exit on the position and unlimited upside open. Now, as the stock moves up and down, I can sell calls against this. That's income method number 1 of the 13 income methods in the blueprint. I can do one of the 2 riskless spread trades, doing a spread trade nested in the married put, a bear call credit, or even a ratio call spread that doesn't add any risk to the position, but gives me more upside potential profit on the trade, gives me income in to lower the risk. One leaves the upside open, the other gives me extra bang for the buck if the stock moves up as I expect. There are 4 ways to manipulate the put option, technically a 5th way based on Patrick's statement. It's discussed, I think, in Exiting the RPM chapter of the blueprint. If the stock moves up, I can roll the put up and reduce this risk by half. That's details there. I can roll the put closer in time and reduce the risk. As the stock falls, but I think it was a systemic market event and my stock's going to recover, rather than buying more stock and averaging down the position, what gained? My put. I can use a different income method to roll down the put, take the profit off of that, further lower my cost basis on the position and get a better break even. I can also buy an additional put in anticipation of a downturn. Patrick's talking about, I think my stock's heading for a downturn. Is there a guideline to follow when the long put becomes useful as an alternative profit to trade? Meaning, hey, I bought this stock, let's say originally at 110. It's now at 106. I've lost 315, 325 on the stock. But everything I'm seeing, news came out, something came out. It hasn't hit the full bore yet, but earnings are coming up. I think this is now turned to a bearish position. I originally opened bullet, but I think it's turned bearish. Why not sell to close my stock, take the loss of $3, which would increase my put to a cost of $15.15, taking a loss of $3.15 there. Now, that's assuming I bought it at 106.85. I'm sorry, I bought it at 110, and now it's down to 106.85. Sorry, Patrick. So I lost $3.15. I've got to account that there. Now I've got a long put position where I'm expecting the stock to fall. And yeah, I'm out to May. Or was it March? I apologize, folks. It's out to May. Good, good. We're out to May. So even if in the next 10 or 15 days through the earnings, 20 days through the earnings, that happens, I apologize. Let's say that it drops to 99, but it does it by the end of January or even sooner, 128. Let me go ahead and calculate there. I'm not at break even. Okay. So I need a much further decline. Let's go to 90. On the 19th, there we go. So now I'm in profit level at that point with the stock trading at 90, near the break even of 89.85, but I need a much larger move. So that's what he's asking. I have never done this, Patrick, in my married put positions. I've talked to investors, blueprint owners, and radioactive traders like yourself who've posed the same question. And using let's go back to the home, using Caesar as an example, I'm going to talk about when, oh, that's my watch list. Sorry, folks. Using Caesar's Palace, I'm going to talk about when I might have done this or what I might have done alternatively, because alternatively, especially in the married put approach, I follow the rules of the blueprint to a T. Not only because I believe in them, Patrick, but also because, and there's wiggle room. There's always wiggle room, but because the trades that I post in Fusion, I want to be directly as close to the guidelines in the blueprint as possible. Shouldn't I practice what I preach? In other words, so that's why I said that. Ernie skews off and does some things differently. Occasionally, when he sees a large stock movement, he sees a stock move up that he's in, he might sell to close his put because the put is actually showing a 30 or 40% loss. Well, monetarily, that doesn't matter because he's made more on the stock. So he's going to sell to close the put and put in a mental stop loss that's still 8 or 10% of the money where he's still 5 or 6% profitable. I personally don't do that. In my Fusion trades, I roll up the put. I don't close the put and use a stop order. I roll it up to keep the protection always in place. Where am I going with all of this, ladies and gentlemen? Let's go back here to Caesars. And we've got two moves here that we can see. Now, we don't have the exact numbers, Patrick, but I'm going to show you when I would consider doing what you're asking, what I would probably do in my Fusion portfolio if you're following the trades in the Fusion subscription at Radioactive Trading. I got into Caesars somewhere back here in this 28 level, and we had the good run. I rolled up the put once, sold a call here that did luckily expire worthless. We had this other spike here. I said to myself, okay, this is going really good. I moved the put up again at that point. Now, at this point, things changed. What do I see? I'm seeing a negative MACD crossover. The MACD 1226.9, the black line, is falling below the EMA line. At the same time, the stock is starting to approach the EMA and the SMA 20. But this break right here, usually when we see a MACD crossover, and it's a little bit late, but this is a point I might use when I determine, do I want to use income method number 12 now? Now, I sold a call, so it gave me some premium, Patrick, but it didn't hedge as far as the drop occurred. But the other alternative I consider in this situation is income method number 12 in the blueprint, whether it's near term or whether it's farther term. I'm buying a second put for near term decline. Then when I see the positive crossover again, now this is extreme and I don't trade the married puts this actively, but I'm looking to do it day by day. When I see that MACD positive crossover again, and we start going above the SMA 20, I'm out of that income method number 12, sold to close the put, most likely here, as close as I could when I saw that MACD bottom. And now I just have the standard. So instead of almost a synthetic long straddle, which we saw earlier, that's what happens when you buy the extra put. So I have two puts against 100 shares. Might be different expirations, and they're probably different strike prices at that point. Now the stock moves up. Okay, I might roll that put up again. Not this one. This one's gone. But my original married put might roll it up again, sell a call here, and then, oops, here's this. Oh, but there's also this. Never a bad time to do income method number 12 or something. Blueprint owners are going to see 4 addendums coming up in the next 2 months. An addendum on discussions on income method number 4, income method number 9, exiting the RPM, and my combination of income method number 6 and income method number 12 heading towards earnings. Sort of the hat trick for locking in gains, but I'm adding extra protection to sort of create a position that goes from a married put like this to, sorry, let me redraw that, folks. It kind of goes like, it's a W profit and loss chart where the break even is essentially there. The loss is only in these 2 areas. Leave the upside open, profit extra to the downside. If it doesn't do anything, still have a reasonable profit zone. It's a combination of 6 and 12. All right, in any case, this break here happens, and it happens before the earnings event, and you see what happens. The stock drops here. This is a perfect time for me to have considered income method number 12 right before the earnings, buying the extra put to create the synthetic straddle. That's not what you're asking. What I'm showing you is that those 2 periods that I showed with the technicals that I use, they're not always the best technicals. They're not the only technicals, stochastics and other things. But Patrick, if I was in a married put at this position and I hit the peak on the stock and I saw this It's a little bit delayed here. I admit that. On this one, it's a little bit delayed. But maybe this was a decent time. Instead of doing income method number 12, buying the extra put and paying the money in, selling the stock maybe up here. You didn't get it, but even here, from when we got in down here, and leaving the put open. And you see that sort of double dip there, and then you see your confirmed cross and confirmed cross bullish. Buy the stock back here. You still had the put in place. Now you could roll the put up, Patrick. Another time, MACD crossover negative, starting to pull back to the SMA 20 and the EMA 20. I might buy the extra put, as I mentioned, for income method number 12. This might be a time to sell the stock, leave the put open. Would have worked. But then when do you buy the stock back? See that bottom? And again, it's not always guaranteed, but this is how I do it. This is what I look for when doing the income methods. What was my recent crossover? What am I looking at on the chart? And so forth. I like to have the stock in play most of the time, unless I'm bulletproof. That's a discussion in income method number 4. There's an alternative to income method number 4, rolling the put up. If I'm already in bulletproof status and I can roll up in bulletproof again, maybe I just liquidate the married put and buy an out of the money call that already has a guaranteed 10, 12, 15% profit on the position. I can't lose anything. Why not free up that capital? That's in the income method number 4 chapter, the alternative to income method number 4. Only after I'm blueprint. But you see what I'm saying. What I did is I bought the extra put and paid money in these potential situations following the guidelines of the blueprint. You could see just as much profit, especially in this massive decline, Patrick, that we had on CZR. I'll tell you what I did with that in a moment. But here, MACD crossover, it's flirting with both the SMA and the EMA 20. Sell to close the stock here. Remember, you got it here, did a couple of these moves here, got some profit on the puts here if you followed it this way. I know this chart is a little bit extreme, excuse me, Patrick, and a little bit active. But you're looking for the trends that match what you know. The other stocks are going to look different. NVIDIA, for example, you won't see these quick movements. You won't see this much changing and the technicals and so forth. But again, I hit that. That's a warning sign for me. Right? This is the warning sign saying, hey, something's coming up. Maybe I buy the extra put the money in. I could also probably have sold the stock here after these other adjustments, sold to close still at a reasonable profit, left the put open, and then, oh Lord, that 28, 29, 30 strike put I have with the stock breaching down into the $18, $19 levels, I'm looking amazing. Oh, and then I got my positive crossover. Not flirting with them yet, but I'm flirting with them here at the 22 mark. So maybe somewhere in here, closer to like right here, maybe I roll down the put that I have, rebuy the stock here at the $20, $21 level, and I'm looking pretty good right now. I'd use income method number 12, Patrick, with my approach. You're doing something similar to profit to the downside, but you're not putting in as much money. You're hopefully taking a profit off of the stock. I know in that Planet example, we were down 318 and 315 on the stock. We had to calculate that into the price of the put. That's what you have to do when you're analyzing it that way, Patrick. Add that loss into the cost base of the put so you can do your correct analysis. But these, for me, this is the triggers I look for up and down on these particular stocks. And Caesars told me all of the views. Now, what I did, like I said, I did 1 and 4s here. I did a 9 here. I rolled the put back down to get a better cost basis. Got back to break even here. Hesitated. I sold a call here, but I hesitated to do anything. And then just recently is when I rolled the put back down to the 24 strike from the 28. And it was closer to here when I saw my second and third signals. And it hesitated, but yeah, I sold a call against it. I should have sold a call yesterday. This is when that Jeffries surprised me, but Jeffries gave an upgrade to Caesars, and it went up to the 20, as you can see, it kind of peaked up here at 25.53. I should have sold the 26 or the 27 call for next week or 2 weeks out. The premiums are rather low, but I'm still in an okay position. It's just a higher risk than I want because of what? Because of the 9 here and because of the income method number 9 here. I'm sorry, apologize. The 9 here and the income method number 9 here. I did use another 4 up here. In any case, I've got a good time left on the position, but I'm at a higher risk than I want, and I need to start getting that down. I was really hoping this would reach 26, and I would have rolled the put up back to 28 most likely at that point. But I should have at least sold a call, and I didn't. So let's see what happens on Monday, right? We got Monday coming up. So there. All right. Patrick says, very helpful. I need to think this all through again, but appreciate the in-depth explanation. No problem, Patrick. I'm jotting down my note, Patrick, for you. I will try to scroll through my library in YouTube to see if I can find another discussion on that. I know I've had a couple over the years. I don't know if I posted all of them, but I think I might have another discussion. But I think this covers why I would do it and when I would do it. If I have time next week, hopefully I'll do. But again, as I mentioned, you guys are going to see a couple of other articles and posts and other things next week. I, of course, now this is the first full week of 2026 trading. So I recorded in my power options portfolio, not in our webinar portfolio that we see, the William Adama portfolio that we see. I haven't transferred those over yet, but I picked exactly all of the picks of the day trades that would have appeared following our approaches for the monthly and weekly covered calls, monthly and weekly naked puts, weekly bull put credit spreads, monthly bull put credit spreads, comparison I'm doing on the bull put credit spreads and others. So we're going to share that with you next week in both the Power Options blog and a link to a video on the YouTube channel. How is that first week's performance working out for us? I didn't want to cover it today because we had a lot of other material we wanted to cover for Rick and for other concepts as well. So in any case, but you'll see that. But Patrick, what I want to do, I'm sorry, is scroll through the YouTube videos for you to find that other information if I have it, and it won't be next week. So maybe in 2 weeks, Patrick, I'll have the time to put together a discussion here. Let's track Caesars. Just as we showed in the video today, what if I had done the married put on that date I talked about, back when the stock was at 24? What if I had done the 4s and 1s that I mentioned and you did the same, but when that transfer happened, I did my 12 and you sold the stock and left the put open? And then using those same MACD views, what happens if I rolled down with income method number 9 then, and you bought the stock back and then rolled down the put and continue and then the next cycle and the next cycle? We'll do 3 cycles of that. The 3 moves we saw, the 3 big moves we saw. Hypothetical, but we have the historical tools to show us what the puts would have been, what the values of the prices would have been. And of course, you know, what could have gotten into the stock price when you reopen the position and so forth as well. All right. So Patrick, I'll try to do that within 2 weeks. Just remind me that next week for standard earnings expiration is kind of busy already with coaching sessions and the other events, other articles and stuff I mentioned. But I want to delve into that, and we'll see what we can find. It's not a bad idea at all. It's another way to exit the RPM. If you think it's turned to weakness, I think it's touched upon literally just a bullet point in the exiting the RPM chapter. But let's expand on that. Let's see if we can get some more useful information for you, additional useful information for you on when I would consider closing the stock and leaving the put open, as opposed to using income method number 9 or the income method number 12 that I like to use.